So, hi everyone. Welcome to the Solar Review podcast. I'm Tom Miller, editor of Solar Review magazine and marketing director here at BayWa RE Solar Systems. And today we're going to do a little financing 101. And joining me to do that is our residential financing director, Rachel Schapira. Thanks for joining me, Rachel. How are you doing?
I'm doing well. Thanks for having me, Tom. Good to see you again.
Yeah, likewise. And I don't think this podcast is going to be for everybody. You know, it's really intended as a primer, a 101 for those of you who are interested in getting into solar financing. But I'll also say that you do have some savvy things to say from time to time. So I think folks might find a nugget or two here that might be useful. So, we're going to publish it as a regular podcast, but we're also going to have a landing page dedicated to this material. So if folks want to dig in more, there'll be the landing page. We'll have a link in the show notes to all of this information. And what Rachel's going to do is just really spell out what's the 101 that you need to know about being an expert on solar financing. And Rachel, with that, I'm going to ask you to set the table. Where should we start for this 101? Give us the lay of the land.
I would say this isn't a 101 for being an expert in solar financing. This is a 101 for so what you need to know to get started, either applying for solar financing or what to do to prepare to apply for solar financing. Most importantly, what goes on behind the curtain, what the solar financiers are looking at and what they're looking for when you apply.
Ooh.
Just a little insight into the black box.
Okay. I like it. I'm intrigued. Yeah. So lay it out for us. Where should we begin?
Okay. Well, I would say the first thing to understand is what's going on in the market from a bird's eye view. And I'd say the first thing to understand is that, 82% of the residential solar installed in the US last year was installed with solar financing. Now that's either leases, PPAs, or loans from one of the major lenders. That's excluding people who are getting their own financing from a local bank. That's excluding, PACE. That's excluding HELOCs. That's excluding personal loans. But 82% is coming from one of the big lenders or one of the big leasing companies.
Okay, yeah, that's a
It's
big point,
number.
huh? Yeah.
The reason for that is really because it allows the solar installer to start selling on a monthly payment, which means that they're talking to homeowners about immediate benefit that they realize the day their system is interconnected. Rather than having a conversation with someone about, hey, this system is going to be a good investment for you and pay off in 5, 10, 7, 12, 15 years, depending on the solar market you're in and what the cost of energy is. You're having a conversation about, you can save money starting, a couple months from now.
Right. Super effective sales tool.
Yeah, it's a really wildly effective sales tool. It also, generally speaking, is a dramatically easier process than what a homeowner has to go through to go out and get their own financing. And, the truth of the matter is in the US, we have a low consumer savings rate. So not a lot of people have large nest eggs. And people who have nest eggs are generally hesitant to part with them during a recession. So there are a lot of forces driving the move to solar financing.
Okay, so we've got 82% of residential solar, being installed in the US is financed solar. So what are I think you mentioned there are two primary ways installers can find solar financing. Can you talk about those a bit?
Yeah, so generally speaking, the solar financiers are working through dealership models where they offer lending directly to the homeowner or they offer leases directly to the homeowner, but they issue payments to the installer. And so the installer should think about, do I want to offer loans or do I want to offer leases? Or do I want to offer both, given the fact that, some people are going to get the most financial benefit from loans and other people are going to get the most financial benefit from leases. So it's really about what type of financial product do you want to sell and then start evaluating which companies that you want to work with from there.
Okay. And so how do folks determine what type of product they want to sell?
So generally speaking, if someone has taxable income, they're going to be really well served by a loan because most of the solar loans are structured in a way so that the ITC benefit or the solar, federal tax credit helps make the monthly payment of the loan lower from day one. But there are lots of people in the US who have homes that are great for solar and could really use some savings on their monthly payment, on their monthly bills, who don't have a ton of taxable income, people on a fixed income, people on disability, people who are retired. And those folks are generally best served by third-party ownership or, leases or PPAs.
Okay. So an installer might or a contractor might want to have a good sense of who they're talking to and which product might fit well with that household.
Exactly. Good student, Tom.
So thanks for that overview. So let's get into the ways that some of these financing options are deployed. How does that typically work? Who is connecting whom? What are the relationships there between the homeowner, the contractor, the financing company, all of that? Can you walk us through that?
Yeah, well, generally speaking, the finance companies want to set up a dealership model where they pay the installer directly for work that's being done, but they offer loans or leases to homeowners. So the installer will have to go through an onboarding process with the finance company to get approved to be able to offer the products that they have in their suite.
And
And
so in that case, the contractor would reach out directly to the finance company that they're interested
exactly.
in partnering with. Okay.
Exactly. So they reach out to the finance company, they'll complete an application. The finance company is going to want to see things like financials, their contractor's license, maybe bank statements, all sorts of different documents that speak to the financial position of the installer. And then they're going to do some additional research that goes on in the background. This is some of that behind the black box, what's going on in the black box that people were wondering about.
Okay.
And if someone meets their underwriting criteria, they will onboard that installer. The installer gets access to the platform to be able to run credit. The homeowner can sign loan documents if they pass credit, and then they can run someone all the way through the installation and disbursement process. And then when the system is completed, system gets PTO, the funding gets paid through directly to the installer.
And before a contractor makes a decision about which financing company they want to work with, what's the best way for them to research these companies? Go to the websites? Are there other ways that they can do their due diligence to decide with whom they want to work?
Honestly, I think there aren't that many finance companies out there. So I think
Hmm.
it'd be worth looking at all the major players. You
Okay.
can listen to them, hear their sales pitches, see what they have to say and what they could offer you. I would also strongly recommend talking to maybe your sales rep at BayWa to see if they have any intelligence there. Talk to other people in the solar industry. It's nice to get a personal opinion. Talk to other people in the industry and hear a
Hmm.
little bit about their experiences.
Okay.
But
So
but
they're really
but there
just a
aren't, I was going to say, but there aren't so many that it's not worth like giving each of the major players a chance to hear what they have to offer you.
and it sounds like they're pretty approachable.
Oh yeah, they're very excited to hear from companies like you.
Cool. So, can we get in a little bit to that black box that you mentioned earlier? Can you give us a peek behind the curtain of these financing
Absolutely.
companies?
I
Okay.
think it's actually really important that installers understand what's going on because I think what the financiers generally are looking at are very reasonable when you think about the position they're in.
Hmm.
The main things they want to check for when they're going through their underwriting process is first, is the company in a financial position that shows that they are going to be around for the long haul? Because the financier needs to know that the business can honor any warranties or any promises they make to their homeowners. Also, that they're going to be in business long enough to take all their projects to PTO.
Hmm.
They want to make sure that the homeowners are not going to get left holding the bag, being served by a fly-by-night operation that isn't being well run. So that's like the first thing. That's why they ask for all those financial records. The next thing that they want to know is there some way they can assess that quality craftsmanship is being done, right? Because
Hmm.
if the work is not being done well, the homeowner is not going to be happy over the potentially 20 or 25-year life of their financial agreement with the financier, right?
Hmm.
Because the installer's relationship, for the most part, when things go well, is very much you go through the sales process, you go through the permitting process, you get the system on the roof, you get it interconnected, you move on. You occasionally hear from some people with service issues, but the vast majority of the customers you only hear from as referrals. But
Got it.
the lenders and lease companies are going to have 5, 10, 15, 20, or 25-year relationships with the homeowners. And so
Right.
those companies are going to they want to make sure that whoever is doing the installation is doing good craftsmanship. And so That's why a lot of them will ask for a contractor's license, because most state licensing processes have a way to process complaints or a way to process issues so that the financiers have visibility when problems arise, or if a contractor has kind of bad marks on their record. Does that make
Okay.
sense?
Yeah, the financing companies are looking out for the homeowner in these cases because they want
Absolutely.
that good relationship over the long term.
Exactly. And
Hmm.
I mean, from their perspective, most homeowners are not very excited to pay for their loan if their system's not producing power or if it's underproducing, right? Because then
Right.
they'll have their full utility bill and they'll have their loan or lease.
Right. Is there more you want to share about the black box?
Yes, thank you for
Okay.
circling us
Yes,
back.
please. Yeah, I think
There's
you're on point three, maybe.
just summarizing again, they want to make sure that good quality work is going to be done up to code. They want to make sure that the company is going to be around to honor any warranty claims. They also want to make sure that the company knows how to get a system installed up to code and interconnected. Because just because you know how to do good quality craftsmanship, it doesn't mean you know how to navigate the complex web of
Right.
regulations and utility requirements to actually get the system to the point where it's producing power and saving a homeowner money.
Totally.
Interconnection can take anywhere from 2 weeks to several months, depending on where you are in the country.
Hmm.
And so the financiers want to make sure that they're working with an installer who knows how to get homeowners through all the way to the finish line. Because again, it's not like any other home improvement asset where as soon as the work is done, the homeowner starts benefiting. The homeowner only starts benefiting when the system gets interconnected and starts producing power and sending that to the grid. So fundamentally, they're looking for the reliability of your company, the reliability of your work, and your ability to navigate the maze of getting to interconnection. Right. So
Right.
that's why they're going to ask for your contractor's license and look for quality issues on your license and then monitor that over time. They're going to look for businesses that have been around a year or two, because generally speaking, people that can keep their company afloat for a year or two have already kind of gotten through some of maybe the biggest hiccups in the learning curve of operating your own
Hmm.
business. They're going to want to see online reviews. They're going to look to see what your customers have to say about what it's like to work with you. And they're going to want to see that you've done a fair number of installations and gotten those systems completed. A popular number with a lot of solar financiers is anywhere from 75 to 100
Okay. Yeah, I was just going to ask.
like installs completed.
Hmm.
That doesn't need to be per year. That could be over several years, but they want to see that you've gotten through a good number of systems all the way to the finish line. Because if you've gotten that many jobs done, well, one, you've figured out by now how to navigate the utilities and AHJs in your area. Oops, I'm using jargon. AHJ is
Hmm.
authority having jurisdiction. That's like either the city or county
Yeah, thank you.
government that regulates permits and stuff like and
Yeah, this is a
inspections and stuff
101.
like
Come on.
that.
Hmm.
Sorry. So a few other things they're going to ask for.
Yes,
And a few
please.
ways kind of around is they may ask for your financials. They may ask to see bank statements. Generally speaking, they're going to want to see that you keep 2 to 3 months worth of your operating expenses in the bank, which is your way of showing that you can weather a temporary downturn. That's always been kind of a best practice for small businesses, is keeping 2 to 3 months worth of money to keep your doors open and your employees paid should things take a tip down, and you can weather the storm. So having some money in the bank is a good way to show that you're going to be around for the long haul. The finance companies are generally going to want to see insurance, also workers' comp, because lawsuits can completely sink a company if they don't have insurance or workers'
Hmm.
comp. And then one thing to know, because I'm sure a lot of people are hearing these requirements and despairing. These are young company. If you're an entrepreneur
Right.
who just started your solar business, and you're like, oh God, 75 installs feels really far away. Keeping 3 months worth of cash in the bank feels really far away. Having great online reviews. Well, I haven't even thought about setting those things up.
Right.
A lot of the solar finance companies will have paths for young companies to kind of get through, but still kind of meet their requirements for stability. So if you have a sister company or a parent company, let's say you're a solar arm that's an offshoot from a roofing company or an HVAC company. If you can get
Mm.
your parent company to cross indemnify your solar business, that could be a path to overcome the financial hurdles. If you're a solar veteran who has been in the industry managing crews a long time, and you just started your own shop because you're an entrepreneur and you've always dreamed of starting your own business, and you learned how it was all done working under
Right.
another company, and you're ready to do it, you may be able to overcome some of the minimum install requirements. Different lenders and financiers will have different kind of ways to make sure that, again, those homeowners are going to be protected and those homeowners are going to have good quality work done.
Right.
That's really what they're looking for. They
Yeah.
want to
So
see
talk about your situation.
exactly.
Explain your track record, explain your work. Yeah.
And if you
And
can get a more established company to back you, that can be another way through.
okay, well, those are some great tips. Are there any others that you have there in your bag, or should I ask you the kind of the final wrap up questions here?
I think that's enough in the black box. So let's
Okay.
focus. Let's pivot over to what do we do until you qualify, and what can you do between now and when you qualify?
Yeah, so yeah, let's talk about that. I was surprised by a few of the hurdles, but we also don't want to make it sound like, getting financing for your company is impossible. It's not at all. Why don't you lay that out? So how can,
Yeah.
a younger company or some of the folks who might not qualify for the normal channels, what kind of tools can they have in their tool belt?
Well, I would definitely recommend reaching out to your local banks and local credit unions. A lot of banks and credit unions, given the great performance of, solar financial products, are wanting to get into offering it. It might be a little bit more cumbersome to work with them than it
Mhm.
is to work with, say, one of the big, solar finance companies that have really mastered making it easy all the way through. But
Mhm.
they can help you get to the point where you can still sell on a low monthly payment. And so you can still expand your addressable market using credit unions and local banks to get you to that point where you have done enough business under your belt where you could look at using one of the, solar finance companies.
Okay, well, that's a great suggestion. Go to your local credit union, your local bank, try to
Yeah,
develop that relationship and see what they can offer you. What
exactly.
are some of the other opportunities that you can think of?
Yeah, I would also say as you're working your way through, to get to those 75 or 100 install marker, make sure you're getting your company into a solid financial position. You can look at getting financials made by a professional accountant. A lot of people are, doing their own bookkeeping at startup
Mm,
companies, but having a professional bookkeeper, professional accountant look at your books is a great way to make sure that you are managing all the expenses. Solar is a very cash intensive business to get all the work done. So making sure that your books are being managed properly is going to help your business, one, survive the ups and downs of the solar coaster, and two, it's going to help you get to the point where you are on stable footing so that you can get through with a solar financer.
right.
You can also work on your building your online reputation. A lot of people don't realize that even if you don't have a website yet, because you're too young of a business to have invested in that, you can go to, Google and get Google reviews. If you go into
Right.
Google Maps, you can claim your address as a business and then have a place where people can start giving you reviews. You can get reviews on Yelp, on Energy Sage, on solarreview.com, on Facebook, on Better Business Bureau. They're all sorts of online platforms where you can start building your online reputation. That's not just going to help you get through with a solar financer, that's also going to help you with customer acquisition, because you may not realize it, but before you meet with homeowners, much of the time they've already Googled you. They've already looked you up on a lot of these sites. And if you don't have a presence there, that might give them pause and it might be
Absolutely.
hurting your ability to close customers. So this
Hmm.
will improve your close ratio and it will improve your ability to get solar financing.
Yeah, great
Um,
suggestions. Is there anything else you want to touch on before we wrap up?
Yeah, if you're a young business, and if you don't already know about it, NAPSEP is a great way for you to learn more on the technical side of the installation process. I
Mm-hmm.
mean, NAPSEP, I believe, even has things to help you learn how to sell. There are all sorts of resources that the industry has put together to help young companies like yourself enter the industry. We want you to tap into them so that you can be a strong, healthy business. That's a big part of this industry's growth.
Absolutely. Great points, Rachel. Thank you so much for doing this.
Yeah.
Laying out
Um,
our financing 101. Yeah, is there something else?
One last thought, though. I hope that me showing you what's going on behind the black box, though, doesn't leave you afraid to apply for solar financing. If you've been in business more than a year, you have a little money in the bank, and you have, and you're doing like at least, 15 installs a year, there are a lot of solar financiers who'd be very happy to talk to you. And so it's not that difficult to get in. I just wanted to show you kind of what was going on behind the curtain so you'd understand, one, why it's taking their risk team or their underwriting team a while to review you, and two, so that you understand that they're not just being arbitrary, asking for random or unfair things. They're just trying to protect their homeowners.
Yeah. Yeah, great point. Thank you so much for peeling back some of these layers for us. I'm excited to work with you to put the article together, and I'm sure our audience is appreciative of your input. So you want to reach out to Rachel, she's a great resource. And yeah, BayWa is here to help you run a successful solar business. That's what we're in the business of doing as well. So Rachel, thanks for chatting with us today. And yeah, see you next time.
Thanks, Tom. See you next time.